YouTube, welcome. It's your favorite guru from Timu. And we talking about how easy trading is. Now, y'all boys be overcomplicating trading. You, my students, your auntie, whoever tried trading, them niggas probably said, hey man, trading sucks. I don't like it. It's a scam. You feel me? That's what my parents used to tell me all the time. Until I started making that cheddar, that cheese off of it. Let me chill. I'm being lame. But yeah, though, trading is very simple, man. Now, like I've told my students, it's a U game, right? So let me break this thing down. And we will be going over the trade I took with my students in my class today. I broke it down for them, and I'm be breaking it down for y'all because I'm like, why not? You feel me? Now, first off, why y'all make trading so hard? Or why trading is easier than y'all really think it is? It's a you versus you game. You versus you game, right? It's not hard at all. You're making it hard, right? Because when you get on the charts, you get down there, you're like, oh man, look at this nice, smooth liquidity sweep. We have to go in the other direction because ICT has cooked y'all brain. It's not that simple, right? So you see a liquidity sweep, boom, you're going to hit the sell button or the buy button, thinking we finna get 200 to 500 points, when in reality, we go for a 10-point retracement and go back down, see a stop loss. Sucks to suck, man. But if you would have thought about it and you would have waited, you would have noticed that, hey, maybe I should follow the trend. You know what I'm saying? Maybe I should follow the trend, nigga. That's what y'all need to start doing. That's how you make trading simple. Have rules set out, right? You don't just get on the charts and see a certain confluence or see something that is so vague that it's not, the market isn't that simple, right? It is that simple, but it's not that simple. The simple thing about it is, most of the time, 80% of the time, it's a proven study. I don't know if it's 80%, but it's pretty high up there. I think it's like 75. But 75% of the time, if you follow the market's trend, you're going to win. I just came up with that in my mind. Put that on the, write that down. You feel me? If you know, I don't know what I'm talking about. But yeah, though, you feel me? It's that simple. Have rules set out. Like my certain rules. If I want to see a reversal, right? Yeah, I can be like those TikTok niggas, like Powell. That's the only one I know that be bottom. Dutch, I know Dutch be bottom ticking. Soap, y'all, all of them. That Payton dude, he's tough. I mess with that dude. Now I could try to be like them, but I'm not them. You feel me? Not yet, at least. You feel? So I'm gonna do what I know has made me money, and that's just by following the trend and following my rules, which are I wait for SMT, and I could be that type of nigga that try to bottom tick, but I would just like to wait and get more confirmation. I would like to wait for IFG. Or a order block getting tapped into in inverse. You feel me? Or respected and pushed down. I would like to see another form of confirmation before I start to enter in the trade, right? Another thing as well, and like I said, we're going to go over my trade I went with my students. I just wanted to talk to y'all one-on-one because trading is very simple. It's not as hard as y'all make it. But yeah, another thing too, though, I like to do is follow the trend. Why I say follow the trend, of course, on the lower time frame, it looks like you're disrespecting the trend, and it looks like it's a breaking structure. In reality, on the higher time frame, like I said earlier, it's just like a 10-point retracement on the higher time frame. So that little big crazy move you see on the 1 minute, you getting so much information because it's on the lower time frame that you think we're changing directions. And when in reality, on the higher time frame, we just pulling back. You feel me? A lower time frame looks like a breaker structure. High time frame pullback. You feel? So I trade higher time frame, lower time frame entries. You can trade the lower time frame if you would like. That's if you. But the lowest I would really go to trade on is 15 minutes because it's really in the middle. Like, you feel me? It's in the middle of the 1 hour and the 1 minute. So it tells me everything I need to know. I'm still getting the lower time frame information, a lower time frame entry, with a mix of a higher time frame bias. You feel? So it's just my mindset. This is the rules I like to wait for, and stuff like that. I just tend to follow those different types of rules. I build my bias, identify the trend, try to follow the trend, find a great entry for the trend, and execute the trade. So let's go over how we did that today with this trade. This is a beautiful trade. Now, I lied to y'all boys yesterday. I know y'all seen yesterday. I said I passed my account. And we clapped it up and all that. In reality, that account didn't get passed. Now, I know y'all probably think, oh, this nigga's a liar. No. I remember, y'all boys remember specifically, I showed y'all $53,000 on the dot. Now, I made $1,500 yesterday. That was 1% over the 50% consistency rule. So they didn't give it to me. You know, they was like, hey, man, if we go to it right now, let me actually go to it right now so I can show y'all boys don't think I'm lying and stuff like that. Let me show y'all what I mean, man. I don't want to show my full government name, so I got to hide the screen. Log in. Okay. Give me that. It's probably still going to show my full government name. Do I really care? Nah, not really. Yes, I do. I actually do. Okay, here we go. Alright, there we go. Boom. As y'all boys can see, look, $1,500 yesterday. Your biggest day. 51.52%. Right? I was over about 1%. 2% if you want to round it up. You feel me? Nothing too crazy. So I had to make my new profit target was 3,127. You can trade however you want to. I don't have to just make it exact take profit, but that was just my new target. And so today I just went for I actually made 200 points which this was a $500 trade. That was a $500 trade right here, which we're gonna go over. But this trade right here, I ended up losing $350, I think. Then this trade I made $550. So that made 200 exactly, right? So let's go over this, right? In this trade, I didn't have my indicators on right here, so I couldn't tell that we were sweeping liquidity and pushing up here. If I was seeing that, I could have got in at this retracement, go to like the 5 minute. Could have got in at this retracement over here, somewhere in this area, wait for a push up, boom, could have aimed for Asia highs up here. You feel something nice and sweet. Also, I do trade with my students. I did go over this with my students live today. So if y'all boys be wondering where I be at and where I take my trades at, that is exactly why. Now let's go over this thing. Now first off, we created, I thought these lows right here, let's turn these indicators off. So the screen can be a little bit more smoother and clear, better to understand. So I marked out these lows and highs right here because I thought these were data highs, but this was just a stupid lightsaber candle. We just made these, so it really was no point in marking those out. Then we actually ended up printing out this news candle, which gave us 150 points. Puts us up 150 points. Now everybody knows if you've been trading for a nice minute now, you know when we have news, we tend to knock out this high. I mean, yeah, when we come up, knock out a high, and then go hunt for the low, right? And that's exactly what we did. But we created the SMT. CES ended up knocking out these highs, knocked out the data high, and NASDAQ did not. So we created the SMT. And on that SMT, we'll go down in here. We actually, we also manipulated right here. I don't know why the manipulation thing. Oh, that's not the manipulation. That's the standard deviation. But we also manipulated above these internal highs right here. It's external liquidity. We also manipulated above these highs. So that was our manipulation leg, our power 3. After we accumulated, we ended up breaking down and we broke through structure, right? We broke structure here. This is what we want to see. So when we broke past this low right here, because these are the up closing candles, these two up closing candles pushed us higher. So when we broke through right here, like that, I wanted to see us press down lower. You feel me? I wanted to see us go down lower. So I ended up getting a bad sale right here. I ended up getting in right here. So we had a little bit of drawdown, but we then ended up proceeding down lower. We barely got. We probably was up. We probably was like down $200 at most in this trade, and then we ended up riding down to TP. But yeah, we broke structure here, into the end here. So these highs are protected now. Okay, these highs up here are protected now. I'm going to be giving y'all boys a lot of sauce and explaining this a lot because I want y'all to understand how trading actually works. If you can have decent technical analysis, yes, a lot of people say technical analysis is not there and woo, but you wouldn't see a lot of people making thousands of dollars off of prop firms or off of options trading with just technical analysis if it didn't work. You feel me? So, yeah, don't let them lie to you. It works. You feel me? So let's go over this, y'all. So we sweep highs. Now these highs up here are protected now. We don't want to see it come above this high up here. It comes above this high up here. More than likely, we're going to continue up higher, right? I don't want to see that. You feel me? If my bias is bearish, right? I actually don't even want to see it come up above these highs either again, because we just took out these highs. There's no reason for us to come out and take these highs because we just took them. Then we had this a down close candle like that. So that was my initial, that was my thought process, right? So my stop was, if I got in right, like right here, stop was like above this candle wick right here. Stop was above that wick. I ended up moving it down when we dropped down low past these lows. Now, if we're biased, I mean, if we're bearish, right? When we're coming to take out lows, we're coming out to take out bullish order flow. We want to see that bullish order flow get taken out with speed, not chop. We don't want to see this. You feel me? We don't want to see anything like that. We want to see speed. You know, if we're going down low, we want to see speed down to the low side like that. You feel me? We want to see something like that. We don't want to see chop, right? So these lows, once I seen that we can get these lows or take out these lows, when we took out these lows right here, the reason we want to see speed is because we're going to make a new low. So we want to hurry up and make that new low, right? So we broke through this low and made a new low down here, right? And we broke through with speed. After this, you can move your stop to you can move your stop loss to break even. I typically don't do that anymore unless I feel like leaving something running, right? If I want to leave something running, like if I thought we were gonna come all the way down here, I could have moved my stop. I could have trailed my stop. But if I'm holding it and the market is volatile as it's been recently, I'm gonna just keep my stop loss at where it's at because I don't want to see it's not gonna come all the way back up there, right? Unless we're changing the state of delivery. So yeah, I think you can move it there, but you wouldn't got stopped out if you would have. But I didn't do it. You feel me? Yeah, we broke through this structure with speed. After that, as you can see, I exited out here, but my initial TP was down here. Why was my TP down here? The standard deviation. Let's go over STD. STD. Damn. All right, look. So yeah, standard deviation. Mark out these highs. Go to these lows. This is going to be my take profit. As you can see, we just came to the negative 2.25 and pushed back up. You feel me? So you could have held it out right here. I wasn't being greedy today. I ended up just going for right here. Yeah, I think on my paper trading account, we actually might have got a tap back in. I don't know though. We might not. Yeah, so swept out these highs, and I want to see us fill out the standard deviation. Also, another reason another TP could have been these data lows right here. Let's take out these data lows. Because these were data lows. You could have aimed for these data lows right here. Right? You know what I'm saying? That still would have been a nice little TP right there as well. Because we aimed for data lows. Data lows were taken out. And once they were taken out, we ended up inversing and pushing back up. You feel me? But yeah, though. As you can see, like I said, you want to learn about, you want to look at the bearish order flow. We make a new low, lower, lower high. What we do again, lower low, lower freaking high. You feel me? Every single time you're making a lower low and a lower high. That tells me that, okay, we're going down lower. We're proceeding down lower, right? Now, when that gets taken out, this high right here got taken out. Okay, boom. We might be going up higher, right? You got also, I like to enter off of these, right? I like to enter off of these highs if we take these with speed. Like right here, this candle right here specifically. When we came back up, when we got right here, I would enter off of this. I like to enter off the break the structure right here, right? And where would I aim for? Probably that next set of liquidity right there. Stops will go like somewhere like right here. Even right here, this is a decent RR right here, right? And you probably want to listen like, you only risking $245 while making $745 if you want to, do it like that. So it's like that's another way I enter off of the break structure. Like up here, for instance, you could have entered off of this breakaway and you would have had no drawdown if you would have entered off of that break. You feel me? I like to do that sometimes depending on if the market is volatile. Now, if the market is very choppy, those break of structures that y'all think y'all are getting, it's not really a break of structure. Make sure like this is a real break of structure because we broke through these up closing counters. These counters right here that pushed us up these highs. That was we broke through that structure, right? We broke through this bullish structure with speed, like I was telling y'all boys. This is the bullish order flow I was telling y'all we broke through and we inverse. We ended up breaking through with speed with institutional order flow. That tells me, okay, more than likely we're going to come back downwards, right? And that is exactly what we did. And that's really it. That was the trade for today. You feel me? That was my trade for today. It was a pretty good trade. You feel me? Like I said, y'all boys, all I did today was follow my rules. You feel me? Follow the rules. And I expected to win. I put in my head, I'm going to win today. I made it up in my mind. I'm a winner. And how many points is this? We entered in like, hold on, entered in right here. 100 points. This would have been a 100 point trade. I tend to go for like 50 points. If you go for like 50 points, this trade would have been like 55, so it would have been at 100 like something like that. This would have been your trade right here if you would have went for 50 points. And let me make sure this is correct. So okay, there we go. Yeah, this would have been 50 points. This only got 40 points actually. But this still would have netted you like $1,000. Yeah, $1,000 on the dot. So it still would have been a decent trade. But yeah, though that was the trade for today, man. We got the funded pass. That's all that matters. So we gonna be making that moolah the rest of this week and next week. So I'm gonna see y'all boys when we get those payouts. But God loves y'all boys. Catch y'all in the video. Peace the freak out.